Decentralized finance, or DeFi, is a type of financial transaction management that makes use of cryptocurrencies and blockchain technology. Hello and welcome to our YouTube channel. In this video we will tell you everything about DeFi. But before we start our video, make sure to subscribe to our YouTube channel. Centralized finance today. Almost all aspects of banking, lending, and trade are now managed through centralized systems run by governing organizations and gatekeepers. To acquire access to anything from auto loans and mortgages to trading stocks and bonds, regular consumers must interact with a slew of financial middlemen. As a result, customers have few options for directly accessing capital and financial services. They can't avoid middlemen such as banks, exchangers, and lenders, who profit from every financial and banking transaction. To play, we must all pay a fee. The new way, decentralized finance. By disempowering mediators and gatekeepers and empowering common people through peer-to-peer trades, DeFi threatens this centralized financial system. Raphael Kosman, CEO and co-founder of Trust Token, describes decentralized finance as an unbundling of traditional finance. DeFi puts important components of today's activity done by banks, exchanges, and insurers, such as lending, borrowing, and trading, in the hands of ordinary people. This is how it could go down. You might deposit your money in an online savings account now and get 0.50% interest. The bank then lends the money to a third party at a rate of 3%, pocketing the 2.5% profit. DeFi allows people to lend their funds directly to others, eliminating the 2.5% profit loss and allowing them to get the full 3% return on their investment. Hey, I do this all the time when I give money to my friends via PayPal, Venmo, or Cash App, you might think. You, on the other hand, do not have this capability. To send dollars, you still need a debit card or bank account linked to those apps, thus these peer-to-peer payments rely on centralized financial middlemen. How DeFi is being used now. DeFi is becoming more prevalent in both basic and sophisticated financial operations. It runs on dApps, which are decentralized apps, and protocols, which are other programs. The two major cryptocurrencies, Bitcoin, BTC, and Ethereum, ETH, are handled through dApps and protocols, ETH. Here are a few examples of how dApps and protocols are being used right now. Traditional financial transactions. DeFi is being used for everything from payments to trading securities and insurance to lending and borrowing. Decentralized exchanges. Most Bitcoin investors are now using centralized exchanges such as Coinbase or Gemini. DEXs let users to conduct peer-to-peer financial transactions while keeping ownership of their funds. E-wallets. DeFi engineers are developing digital wallets that can operate independently of the main cryptocurrency exchanges and provide investors with access to a variety of assets, including Bitcoin and blockchain-based games. Stablecoins. Stablecoins, unlike cryptocurrencies, try to maintain their prices by connecting them to non-cryptocurrencies, such as the US dollar. Yield harvesting. DeFi, often known as rocket fuel, allows speculative investors to lend crypto and potentially profit handsomely when the proprietary currencies that DeFi borrowing platforms pay them for consenting to the loan rise rapidly. Non-fungible tokens. NFTs turn non-tradable items like slam dunk videos and Twitter's initial tweet into digital assets. The previously uncommodifiable becomes commodifiable with the use of NFTs. Flash loans. These are cryptocurrency loans that allow you to borrow money and repay it all at the same time. It works like this: borrowers can profit by engaging into a contract inscribed on the Ethereum blockchain that borrows funds, executes a transaction, and repays the loan instantly, no lawyers required. The funds are automatically returned to the loaner if the transaction is unable to be completed or will result in a loss. If you make a profit, you can keep it after subtracting any interest and fees. Flash loans can be thought of as a type of decentralized arbitrage. The DeFi market assesses adoption by calculating what's known as locked value, which measures how much money is currently invested in various DeFi protocols. DeFi protocols have a total locked value of about $43 billion at this time. The omnipresent feature of blockchain drives DeFi adoption. A dApp is globally available the moment it is encoded on the blockchain. Risks and downsides of DeFi. DeFi is a new trend that carries a number of concerns. Decentralized finance hasn't been put to the test because it's a new concept that hasn't been around for very long. Furthermore, national authorities are scrutinizing the systems they are putting in place more closely in order to regulate them. DeFi also poses the following dangers. No consumer protections. DeFi has thrived in the absence of rules and regulations. But this also means users may have little recourse should a transaction go foul. In centralized finance, for instance, the Federal Deposit Insurance Corporation, FDIC, reimburses deposit account holders up to $250,000 per account, per institution if a bank fails. Moreover, banks are required by law to hold a certain amount of their capital as reserves, to maintain stability and cash you out of your account anytime you need. No similar protections exist in DeFi. Hackers are a threat. While a blockchain is extremely impossible to change, other components of DeFi are vulnerable to hacking, which can result in money being stolen or lost. All of decentralized finance's possible applications rely on hackable software platforms. Collateralization. Collateral is a thing of value used to secure a loan. When you get a mortgage, for instance, the loan is collateralized by the home you're buying. Nearly all DeFi lending transactions require collateral equal to at least 100% of the value of the loan, if not more. These requirements vastly restrict who is eligible for many types of DeFi loans. Private key requirements. You must secure the wallets used to keep your Bitcoin assets while using DeFi and cryptocurrency. Private keys, which are long, unique codes known only to the wallet's owner, safeguard wallets. There is no way to retrieve a lost private key, which means you lose access to your funds. How to get involved with DeFi. Here are a few places to start if you want to learn more about DeFi in a hands-on environment. Get a crypto wallet. Set up an Ethereum wallet, such as MetaMask, and then fund it with Ethereum. Self-custody wallets are your ticket into the world of DeFi, but save your public and private keys. If you lose these, you won't be able to access your wallet again. Trade digital assets. Doug Schwenk, president of Digital Asset Research, suggests swapping a small amount of two assets on a decentralized market like Uniswap. Attempting this practice may aid a crypto enthusiast's understanding of the present ecosystem, but be prepared to lose everything while learning which assets and platforms are best and how to handle risks. Start slowly, keep humble, and don't get ahead of yourself when venturing into new financial territory. Keep in mind that digital assets exchanged in the cryptocurrency and DeFi worlds are volatile, with a high risk of losing money. The future of DeFi. DeFi's future appears bright, from eliminating the middleman to converting basketball clips into monetary digital assets. That's why, even though DeFi is still in its infancy, professionals like Dan Simerman, the head of financial relations at the IOTA Foundation, a DeFi research and development organization, view the promise and potential of the technology as far-reaching. Investors will soon have more autonomy, allowing them to deploy in imaginative ways that appear unthinkable today. DeFi has significant ramifications for the big data industry as it evolves and allows for new methods to monetize data. However, despite its promise, DeFi still has a long way to go, particularly in terms of mass adoption. It is our responsibility to continue to educate people about the possibilities, but we must also continue to work hard to develop the tools that will allow them to see it for themselves. Thanks for watching. That's all we have for today. Share your views in the comments section below. Also, don't forget to subscribe to our YouTube channel and press the bell icon as well.